To start off, let's take a look at some of the major news-making headlines. In a significant move, Hindustan Aeronautics Limited, or HAL, has announced a final dividend of Rs 10 per equity share for the financial year 2026. This declaration is subject to approval by shareholders at the upcoming annual general meeting. The record date for determining eligibility for this payout has been set as August 14, 2026. This development comes on the heels of HAL's Q4 results, which showed a consolidated net profit of Rs 4,196 crore, marking a 6% year-on-year rise. The company's revenue from operations also saw a 2% increase to 13,942 crore rupees in the same quarter. For the full financial year 2026, HAL reported a nearly 9% rise in net profit to Rs 9,116 crore and a 7% growth in revenue to Rs 33,089 crore. Moving on to other news, we have the story of GIFT City, which is fast becoming a hub for international finance in India. There are also updates from the world of technology, where companies like Hexaware Technologies are making significant strides, including securing partnerships with major players like Amazon. In the market trends, it's been observed that financials and pharmaceuticals have been leading the charge, while IT stocks continue to face headwinds due to global uncertainties. The Nifty 50 has been trading in a narrow range, indicating caution among investors. As we navigate these complex financial landscapes, it's crucial for investors to stay informed and adapt their strategies accordingly. Whether you're a seasoned investor or just starting out, understanding the intricacies of the market can make all the difference in your investment journey. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the latest developments in global markets, where tensions between the United States and Iran have been escalating over the weekend. Despite initial concerns of a full-blown conflict, it seems that both sides have agreed to halt hostilities and resume peace talks. This news has had a relatively muted impact on oil prices, with Brent crude trading at under $73 per barrel on Monday morning. However, the tech sector remains volatile, with last week's sell-offs and profit-taking still fresh in investors' minds. Concerns over product price rises and potential delays to initial public offerings are adding to the uncertainty. Meanwhile, the dollar is poised for its biggest monthly gain against major peers in nearly a year, driven by Federal Reserve rate hike bets. As we navigate this complex landscape, it's essential to consider the potential implications of these developments on global markets. The shortened week ahead, due to the Independence Day holiday in the United States, will bring a key release of June payrolls data on Thursday. This will provide further insight into the outlook for Fed policy and could influence market sentiment. We'll be keeping a close eye on these events and their potential impact on investors. With the European Central Bank's annual symposium kicking off today, we can expect more news and analysis to emerge throughout the week. For now, it's clear that investors will need to remain vigilant and adaptable in response to these shifting market dynamics. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at a significant development in the Indian financial landscape. The Shapoorji Pallonji Group, a major player in the Indian economy, has been working on a substantial refinancing deal to manage its upcoming maturities, and it seems like they have made some progress. According to recent reports, anchor investors in the group's bonds, including big names like Ares Management, Cerberus Capital Management, and Deutsche Bank, have agreed to extend the relaxation on the loan-to-value ratio of pledged securities till September 30th. This is a crucial approval that paves the way for a significant 22,000 crore refinancing deal led by Deutsche Bank. Now, this development has sparked some interest among investors, particularly with regards to the group's stake in Tata Sons, India's largest unlisted company. Some investors had earlier pushed for clarity on the monetization of this stake and deleveraging plans. However, it seems like they've gotten the necessary reassurances, at least for now. It's worth noting that the Reserve Bank of India's recent framework for upper-layer non-bank financial companies has also played a role in improving investor sentiment. The retention of the 1 lakh crore rupee asset threshold has led to expectations that Tata Sons might need to go public, although no timeline has been indicated. As we analyze this situation, it's essential to maintain a balanced perspective. On one hand, the Shapoorji Pallonji Group's refinancing deal could provide some much-needed relief and help them navigate their debt obligations. On the other hand, investors are still waiting for clarity on the group's long-term plans, particularly regarding Tata Sons. As we close out today's Riskwiser Zone, it's clear that this story is far from over. We'll be keeping a close eye on developments and bringing you updates as more information becomes available. In the meantime, it's essential to remember that investing always involves some level of risk. So make sure to do your research, stay informed, and consult with financial experts before making any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.